Do you often find that people avoid talking finances? Does the thought of money, taxes, or estate planning make your head spin? These are actually crucial topics for every couple to discuss and have a simple understanding. Many men and women just avoid these topics completely, or they give total responsibility to one spouse. While I'm not a tax expert, I can tell you a few secrets that I have learned in running my own business, and I can share with you what tax experts have revealed to me. There are two tax systems in the United States, one for salaried W-2 employees and one for business owners, which includes small home-based businesses. As a W-2 employee, you are paying too much in taxes. Let me explain. As a business, you get more tax deductions, resulting in paying less in taxes. As a W-2 employee with no deductions, you are actually giving up 40% of your income in taxes. That should make you feel sick. That was an incentive for me to begin my home-based business. Let's run through two scenarios to show the two tax systems and their difference in your tax obligations. The first one, a married couple with an average household income of $60,000 with one W-2 income ends up paying $10,740 in taxes, leaving them a take-home pay of $49,240. Zero of their living expenses are tax deductible. Now, considering that the average cost of living is $53,000 per year, that leaves this married couple with a negative of $3,740. No wonder families are going into debt every year, and why money remains the number one stressor for most marriages. In the second scenario, we have the same couple. The husband is a W-2 employee earning $60,000, but the spouse started a home-based business, which begins earning $500 per month for an additional $6,000 per year, bringing the total of their income to $66,000. Now they are able to write off $25,000 in business expenses. Notice, living expenses are converted to business expenses. Phones, internet, meals for meetings, travel, paying your kids to help you, partially writing off a home office, a mileage on your car, this all adds up. This couple reduced their tax obligation to $7,185, making their take-home pay $58,815. Again, consider the average cost of living of $53,000. They now have a positive cash flow of $5,815. What a difference a home-based business can make. To recap, the first scenario ended with a negative cash flow of $3,740. In the second scenario, they had a positive cash flow of $5,815. Now, isn't it fun to talk finance? Here is the work involved in a profitable home-based business. By adding income-producing activities for a minimum of 45 minutes per day, 3 to 5 days a week, tells the IRS you are treating your business as a true business and not as a hobby. So you can see it's not only how much you make, it has everything to do with how much you keep. For me, Young Living was an obvious choice because I wanted the products for my family anyways. If this makes sense to you, let's get going. Launch your business today with the purchase of one of Young Living's premium starter kits, and guess what? The starter kit can be your first tax deduction. Now that financial talk wasn't so scary, was it? Keeping income just makes sense. Tax information from this video can be found in Courtney Epps' book, More Relaxing, Less